Hello, my name is Joshua Morrison, an investment analyst here at True Potential. Whilst it may be hard to believe, we are fast approaching the halfway mark of 2019. Thusly, despite Brexit still being on the horizon, we believed it appropriate to have a review of all the reasons to remain positive on the UK. In this case, we're going to focus on the job prospects, wages, prices, and the general health of the UK economy as a whole. Primarily, the UK's labour market has remained resilient throughout the uncertainty of Brexit, and despite the unwavering decline in unemployment levels, the most recent data release continues to defy expectations and instead edged further down from 3.9 to 3.8%. This is the lowest level of unemployment since 1974. Moreover, the proportion of women in the labour market is now at the highest level since records began. In addition to this, the latest wage data suggests that earnings growth is still far outstripping inflation, which means real wage growth remains positive. This is an important factor because it reflects a greater level of disposable income, which in turn can translate into higher consumption, a key component of GDP. The penultimate measure to look at is the level of consumer spending. This metric can be erratic and is highly sensitive to the levels of consumer confidence. Throughout the course of Brexit, both of these measures have tailed off and seen a continual decline. However, data compiled last week by the Office for National Statistics, or ONS, shows that sales increased by 6.7% on the year prior, far outpacing market expectations of 4.6%. This is the sharpest increase since October 2016. Finally, throughout the Brexit period, business investment has been highly constrained as uncertainty fogged the horizon for investors. However, earlier this week, data suggested that throughout the first part of the year, business investment grew 0.5% quarter on quarter. This latest figure defied analysts' much lower expectations and halted 4 consecutive quarters of contraction. The Bank of England said improved business investment was brought about by the UK's tighter employment market, low interest rates translated to low costs of finance, and finally, robust returns on capital. Through the amalgam of those factors previously covered, the ONS reported that the UK's value of goods and services, or GDP, increased from a sluggish rate of 0.2% in the last quarter to 0.5% this quarter. UK economic resilience at the start of 2019 runs counter to indications of weakness shown by many business surveys, which suggested global weakness would pull the economy down. This has helped drive investor confidence around the UK as a whole. Ultimately, Brexit is still on the horizon. We will have to face it one way or the other. Despite this, it is reassuring that given the levels of uncertainty, the UK does still have an array of positive economic fundamentals to fall back on. We have a strong labour market, contained price increases, wages picking up, and the possibility of pent-up demand from businesses being unleashed once we break the Brexit deadlock. As always, don't forget to subscribe to our YouTube channel to ensure you never miss out on our economic updates. Thank you for watching.